Signals on IT 1.3. While I'm waiting for Signals Marketplace callers, it's 10 to 10:15. We'll go straight to the interview for this morning. Very, very special thanks to uh okay, so let me finish laughing first and then start my thought process. So a very special thanks to Shola Oshonaiki, who 2 months ago decided that this was going to happen. I have with me how life was just life in myself was very funny. This conversation should have happened like a month ago or so, a month or 2 months ago. But for some reason, life just decided to life. But I decided to tell life that it's my time. Well, we're discussing building ventures that last. Don't laugh yet because you know what I'm talking about. So just calm down. Now, we're discussing building ventures that last, and I have with me a poet. The poet first, entrepreneur, and a venture steward exploring the intersection of faith, science, and system thinking. As the founder of Funema, a redemptive venture building company, he helps early stage founders scale with integrity and clarity through cash and kind venture building investments. His writings through SALT, SALT, and Bottles of Borrowed Happiness blend spiritual reflection and poetic insight, inviting readers to see business as both a calling and a craft. When not building ventures, it designs mathematical frameworks that reimagine growth as a fusion of strategy, execution, and grace. He is known as, well, he likes to sound very typical Yoruba man, Daffy, but we will call him David. David Ogundeko. Oh, yes, I was going to get you.
I see you've been to my Instagram.
Yeah, my team had to do that research. Well, welcome to Signals on 91.3, and finally it happened. So we're
Happy
discussing
to be here.
that last. So the floor is yours. Why should we build ventures that last?
Wow. You started with violence.
No, and the violence is taken by force.
And the violence taken by us. So why should we build ventures that last? That's a very philosophical question.
Mm,
It's more philosophical than business, but let me do my best to merge both.
okay.
Everything that you see around you, it's designed by business, it's designed by ventures. The very mic you're using for this interview, the very studio that you're staying in,
Mm,
it's purely by entrepreneurs. They envision how reality should be, and then they're brave enough to create that reality. And if their business models are not designed to last, then it means that our reality can be very, very warped. So we need to build ventures that last because, yes, they transform reality, but they also create economic opportunities for not just for, for you as the hustler or the entrepreneur, but for the society that you're embedded in as well. So
mm,
we need to build ventures that last. It's very, very crucial.
mm. Now, if we're building ventures that last across the different divides, home and abroad, what have you seen differently as business owners and entrepreneurs and people who are starting up businesses, well, the regular startups beyond tech? What have you seen so far that merges everybody together?
Technology is when people say that, oh, they're in tech, I don't understand that statement.
Okay.
I don't understand the statement because technology is not necessarily an industry. We've kind of codified it as an industry, but technology is an amplifier.
Okay.
If we look at every tech business model, there's a traditional business model that technology has been able to sort of automate, make it a bit more efficient. And now we have intelligence, artificial intelligence, to make it much more self-sustaining to an extent or self-aware to an extent, not really human, but you know what I mean? But without real economy, without real kata, without real
Arakata.
buy and sell, yes,
Okay.
without real buying and selling, you
Mm,
can't have technology. Technology cannot just exist on its own.
hmm.
So, but the key ingredient is, are you solving a problem that actually exists? And is that problem, very crucial to the decency of life? I mean, well, is it a blocker, a bottleneck to people enjoying a decent lifestyle. Now, if you as an entrepreneur are able to design a solution that takes away that problem, then you have a business. But what technology then does is that it brings in the tools and the resources to make your solution more efficient. You can increase your throughput, scalable as well. You can reach millions, if not billions of people. Twitter is basically a messaging platform. It's basically you meet at the town square and then you're chatting. But now you can do the same thing, but with someone in China while you're in Eputebeta,
Okay.
you're in Michael.
Mm-hmm.
Yeah, that's just what it is, really.
Mm, mm. Now, some will call you a venture capitalist and be nice, be nice. Some will
I'll
call
do
you
my best.
exactly. Some will call you a venture capitalist, and but you found a way to merge your faith with it. How do you balance it?
Another violent question. Wow.
I did not mean that. See, I did not mean that.
Yeah, it's
But you have to answer.
when you were warning me in essay that you're going to come guns blazing, I thought,
Even
oh,
me.
oh, come on, I've
But
seen it
I
all.
told you now. I told
I,
you that I don't see myself coming. So we have to do the job that we
so
have.
for me to answer that question, I need your permission. Can I go deep
Yes,
into
yes.
spiritual
Go ahead.
things?
Go ahead.
Right?
Yeah.
Okay, so I have always rejected the notion or the idea that we've got the secular
Mm-hmm.
and then you've got the spiritual. And I think that's one of the biggest deception that life or society has accepted. It's not true.
Mm,
Actually, business is very, very spiritual because what you're building is affecting the lives of people,
true.
everyday people. Really think about it. Even the technology that we use in churches or in places of worship, right? You cannot, speak to 1,000 people in an auditorium without a microphone.
Mm,
So
mm,
it's very crucial to faith. Yet the people responsible for that technology see themselves as not part of the faith or the spiritual
movement.
culture or fabric, so to speak.
Mm,
That's a very that's a it just doesn't make any sense. It's like creating chaos. So now back to your question, how am I blending faith with venture capital? So it's a very I'll start with my journey, how I started. When I started Funema in 2017, I felt the Lord speak to me. And then he told me that he wants to use Funema to show the world that there's a different way to create wealth.
okay.
Because the way the world creates wealth today is really about taking, 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 and then they give you a little bit. It's more selfish driven
And
than
more ruthless.
generosity and very ruthless. And it's actually the very root of that approach is fear. It's the
Mm,
fear of not having enough, or the fear of being left behind, or the fear of coming last. But we'll go with that. Let's put that aside, and then I'll come back to the questions. And what he told me was that he wants to show that there's a way to create wealth by being generous, first of all,
okay.
before then taking for yourself. Because blessed is he who is generous, or
Mm,
blessed are those who give up, because they shall receive,
mm,
pressed down, shaken together, and running over. But that's not the way venture capital works. It's venture capital is really about finding the opportunities that can create the maximum alpha or outstanding returns for the investor. And you can already see that from a first principles basis, the founder who is being invested in is not even in the equation.
mm,
It's
mm.
not in the equation. And this is why many ventures don't get funded. Now, how am I bringing faith into it? Faith is saying that because God is my source, God is the one backing me, God is the one that has sent me on a mission. I don't need to understand. I mean, the numbers don't have to make sense from today. If I have the conviction that the business will be successful, then I will go ahead and back that business because God sees the end from the beginning. There's this joke I like to share with people. Imagine if we had a stock market back in the days, for those of us that read the Bible, if we had a stock market in the days of Moses and Pharaoh, And you could buy the Egyptian dollar, you could buy the Israeli dollar at the time. Let's just imagine that we
Yeah.
had two currencies then.
Hmm.
Everyone would have put their money to back the Egyptian dollar. Why? Because they were the superpower of the day. They
Yeah.
had, the mightiest army. They had the greatest economy. I
Mhm.
mean, it was booming. Real estate was booming.
At that
They were
time, yeah.
building new at that time. But the Jews had nothing. But what did God do? In one night, the entire wealth of Egypt was transferred to Israel. Now, what it means is that your traditional fund managers, they all would have failed. It would have been like the biggest crash in history, of worse than the 2008 stock market crash. But those who believe in God and are led by God would have been wealthy overnight.
Hmm.
So that's what's driving me, by bringing in faith. What is it that God is telling me about this business? I've seen founders, for example, who from day one within my portfolio, VCs would not want to back them because they just couldn't understand what they were trying to do. They felt like the problems were too difficult to solve and maybe too intractable to scale. But today, VCs are trying, I've kind of rushed to put money to back them because the founders have been able to prove what they're doing. And now it's scalable. And now VCs are coming in to back them. So if I didn't have the faith to believe in what the founders doing at the time, we wouldn't have been able to back them. So that's how I'm bringing faith. It's from a first principles perspective. There is more than meets the eye. And by looking at an opportunity from a spiritual lens, you can see what others could easily miss out on.
Okay. Well, the signals on 91.3 we're discussing building ventures that last with David Ogundeko, who's creating a community of well, let's be nice, creating a community of believers who can create businesses from start and look through till the end. If you have questions, comments, send us a WhatsApp message 0809-234-5913, or you can call us 0704 700 8913. Now, how do you help founders scale with integrity and clarity, not just speed? Because in the recent years, when we hear people raise monies and funds, some people who are bootstrapping we wonder, but what are they creating? And then by the time these founders then raise these funds, VC series A, B, C, D, and all of that, and then 2 to 3 months down the line, 1 year down the line, everything has crashed. What do you then think is the
Mm,
problem? And what have you seen so far?
wow, I love this question. So, um, it's a misalignment of
Okay.
different principles.
Okay.
So, traditional venture capital is about speed and scale. If you're not building a solution that can address a large addressable market size, we're talking about millions and hundreds of millions of people, can tap into existing cash flows. So you're not having to like create the revenue. The revenue is already there. You're just redirecting, the money. Because if that is a tenant of the market, it means that you can really scale your revenue potential in a very short time frame, maybe about 5 to 6 years. And then maybe access to market is also very, very easy,
Mm,
whereby in acquiring new customers on an annual basis, you're growing by 10x, 5x, 3x, whatever the case is. Then if your solution cannot do that,
mm-hmm.
then you're not ready for venture capital. Now, there's nothing really wrong with that model. The
Okay.
challenge, however, is about the ecosystem. Our ecosystem is not ready for that. We're still in the early stages of our, should I say, industrial revolution here in Africa and many markets in the global south. Now, we can go deeper, but we'll be having a history conversation here. So I'll put that on pause.
Okay.
Let's just stay on business. I would say that there's a misalignment of capital and founders. And I think that founders have been sold this this false, this fallacy, to be very kind, that you have to build a business for an investor.
Hmm.
That's not true. The very reason why you're in business is to solve a problem that a customer has, and then you make money while doing it. You're making money because it's a fair exchange between the business and the customer. You're creating value and you're taking value back from the customer. So you can also keep on creating value. That's a very equitable transaction. It's a very equitable relationship. And if founders can be redirected to focus on that, then it will be very, very difficult for them to pursue or to be, attracted to noise. They will focus on signals. And what do I mean by signals? And this is kind of like a double trumpet because the name of your program is Signals. So I guess there's a prophetic alignment here to an extent. Signals mean it's a very multifaceted meaning, but for the context of the question you asked is they need time to find what who the real customer is. A business is organic. It's pretty much like a human being. For example, when you have a baby today, you can't send that child, it's a 1 month old baby to university to go and learn calculus or advanced mathematics, unless the child is a prodigy. You never know. Could be a
At
savant.
one
And
month, that's even a danger.
it's possible now. Wait, it's possible. Now, if you are that kind of child, that's what visas look for. But anyways, let's not
Yeah.
derail. Um, uh, just as a child has to grow organically, eat the right food, wear the right clothing, go to the right educational experience or whatever the case is, a business has to go through that organic evolution, and it takes time to do that. And it means that the founder needs to find the right sources of nutrients in terms of customers and capital that would align and fit their business at the right stage. When they raise a lot of capital too early, on the presumption that the market size is really big, and in many cases, that could be the truth. But because the market is big doesn't mean that you can access that market in 1 year,
No.
especially here in Africa, because the market share is heavily fragmented. Distribution is a major problem, and that is more of an infrastructural issue. From a non-technology basis, we have a very poor infrastructure when it comes to logistics, when it comes to markets. Do we have a very fluid in supermarkets, commercial system? We don't really have that. We're getting quite good with banking and payments, but it's still fragmented in many cases. Now, these can create bottlenecks for acquiring customers and collecting your cash or revenue from your customer base. Now, that's the real economy. In the digital economy, we also have more challenges there. All the channels that lead a business or a founder to the customer, we don't really own those channels. For example, we are having this fantastic interview on Zoom. It's not owned by an African organization. It's not owned by a Nigerian company, is it?
No.
Now, if there happens to be a future policy one day, I won't mention names, but then the policy says that, US IP cannot be used in African countries because of yada, yada, yada. This call will not be able to happen. You would lose access to your market almost immediately.
Yes, yes, yes.
Now, we don't own the channels that lead businesses to customers. And because we don't own the channels, that means that we can't really control the price of using those channels. And it means that we can't even control our acquisition costs. Now, these are metrics that founders need time to understand and master. It really is like riding a storm. But when there is a lot of capital, they have to grow really fast. So founders end up spending money to solve problems that may or may not
Mm.
um, exist, and they can churn through capital. It doesn't mean that, buying houses somewhere, that's not the case. They're really spending a lot of money on acquisition costs, on, the cloud resources to power the technology. And before they know it, they're spending in dollars, not naira, by the way.
Mm.
That's the false assumption that we think, they raised $5 million. Why? Because in our mind, we're like, you're a billionaire. No, they are spending that cash in dollars. At the end of the day, a huge chunk of that investment is not even staying in Nigeria. It's not staying in Africa. It's in the US bank account that they have, and the money is going back into the US ecosystem because we don't really own the infrastructure that power local Nigerian or African businesses.
Okay, so beyond the payment systems, because bear in mind that I think for a while we've all focused on payment channels. Yes, payment channels, and I wonder that, and we have so many similar apps, similar startups, and there's nothing focusing on the likes of and Biola comes to mind, right? Biola, whose wife is a baker. How can she get investors? right? Because again, she will need to buy a lot of stuff. How
Mm.
can the regular guy on the street, the regular woman who has their own minimum businesses, raise investors? You know, our own investors here is other people's monies, friends and families, right? And then they're willing to go through. But when do we scale up beyond other people's money to real-time investors, to normal regular businesses, as against tech?
So technology, I think we can move away from purely tech companies,
Yes.
what they have is just software, and then to tech-enabled businesses. So for a small business owner like, Mrs. Biola,
Yeah.
um, she can leverage technology to be a bit more efficient because the beauty about technology, for example, is that
Yeah.
like, okay, her husband uses
Yes.
technology to reach out to you.
Yes.
And let's imagine that we have close to 1 million people listen to this interview, and then maybe 10, maybe 1% reached out to you or
Okay.
called a number.
Yeah.
That already is traffic coming to our website or coming to a number. If it's a WhatsApp number, she could have a lot of interest happening all at once. That couldn't have happened without technology.
Okay.
So technology is enabling the scale of a reach and possibly enabling, a fluid engagement with customers. Because if they came to a store and they have to book like a session to speak to her, maybe she can do like 20 in a day or 100 in a day, but she cannot talk to 1,000 people in a
No,
day.
no.
So what technology does is that it amplifies a system that already works. Now, if she really is as fantastic as the husband says or
Oh, the
claims
husband constantly
that
calls, so there is not
she's,
even need.
yeah,
Like, when somebody says this is Biola, I know in my sleep that yes,
I know, but there's this famous song, When a Man Loves a
because
Woman.
he has invested now. So obviously, Biola, you're not sitting there. He's also
Yeah,
invested. He's also an investor in the spouse's
yeah,
business. So he has to
yes,
ensure that the
yeah,
what you're saying has to work. So I'm sure it's
yeah,
this. So go ahead.
yeah. So back to your question,
Yes.
because investment is really about generating a return. Now, I'll wear two hats now. On
Okay.
one hat, let's imagine I'm a ruthless venture
Yeah.
capitalist investor,
See,
right? No faith, no beliefs,
there's
nothing.
wins.
I'm very ruthless.
Your
Let's just
ROI.
imagine I'm it's really about my bottom line because if I'm a regular investor,
Mhm.
I have to compare our business and the potential return to other sources of returns. It's
Hmm.
a portfolio approach. So I could be like, okay, fine. I can put my money on the stock market, where risk is not as high, or I could put my money in treasury bills or in government bonds, and my risk exposure is not as high as entrepreneurship. Because when it comes to founders of businesses, you have humans involved.
Hmm.
And when you have humans, because humans have agency, you cannot predict and control human beings. It
Hmm.
can be very risky. In fact, that's the number one risk factor in any business venture. It's humans, it's people who are the founders and then the customers. Right. Now, I'm not making the case for AI, please don't get me wrong. I'm just saying that
We're not even talking
humans.
about AI today. We're not talking about AI. We're
Yeah,
talking about
yeah.
my
So
focus is talking about real-time business
yes, real-time
owners.
business. Now,
Yeah.
if I'm a pure venture capitalist, if Biola comes to me, and she has no hedge against the risks in her business, for
Yes.
example, risks to sustainability, and that could be ensuring that people can pay her and she can collect her money, and the
Hmm.
money is going to a bank account, and then she can also, pay her bills, and that's running smoothly
Yeah.
because you have three stages, should I say three parts of a business. You've got the part where you're solving the problem,
Okay.
and you've got a part where you're producing
Hmm.
the solution, and you've got the part where now you're taking that solution to the customer and you can get more customers. It's a framework that we designed in Funema. We call it first principles disorder. You have the market gap, you have the bottleneck gap, and then you have the goal gap. Now, for a business to be sustainable, they have to get the market gap sorted. There's real problem, there's real value, and the bottleneck gap also is quite fluent. I mean, the operations are running smoothly. Now, if a company is sustainable, and then I'll be like, okay, let's have a chat. Now, if I had to put $1, or let's say 1,000, I'm sorry, let's say 1 naira,
No, no,
one
no.
naira, in dollars business as an investment. And if she cannot get me back 2 naira, or 3 naira by the end of the year, then yes, it's very risky for me because if all she can pay me back is 1 naira 20 kobo, I'll just take that money to, government bonds or treasury bills. Why? Because I know that the risk of losing that money is almost zero. There's a guaranteed return, and I can get back my investments plus a yield. That's the challenge we've invested in entrepreneurship. Now, if she tells me that she's got technology involved, that she has not just her husband, she has 20 more people who are calling all the radio stations on a daily basis
Yeah.
to drive traffic to her WhatsApp page.
Yeah.
So on a daily basis, she's getting at least 100 people reaching out to her and asking. So I know, okay, you've got a bit of skill. So you've got 100 people on a daily basis. Let's imagine, 10 days in a month. That's
Mm.
already about 1,000 people. If she has a 10% conversion rate, she's selling to 100 people. If she's selling 10 naira or 100 naira worth of goods on a monthly basis, that's income. If she increases that on a monthly basis, maybe from 10% conversion to 12% the following month, and then maybe 13% the following month, there is growth happening. An investor looks at growth. If the growth is possible, if the growth can be sustained, and if the growth can scale, it means that, okay, you can generate a return for me. You can at the very least bring me back my money, worst case scenario. Because if your business were to go down, I can come and just take your assets or take your technology IP and then resell that. I'm sorry, that's the heart of a very ruthless venture
Well, so
capitalist.
it's not even at the heart of a very ruthless. It's just at the heart of what business looks like, because now you've run me through the scalability, and in my head, and the response I was to give you was, so that is in a country that works, not like Nigeria. Nigeria works, right? But the ups and down of the business can be very, very interesting. So how then am I to say that, okay, we have been diligent enough, right? But the business is not coming. Mm? And so yesterday night, I was on my way home very late at night, and I met with a taxi man, and I was coming from somewhere, and I was coming from the airport, and the crowd at the airport, like people are trooping in. This is the dirty December is starting already. And I asked him, I said, oh, so he drops me off at home. I said, are you going to take a ride back? He said, no, I'm going back to the airport, that this is our season. And he said, from November till January, it's our peak season. Everybody has booked us reserved. And I sat down, I was in that car looking at him. And he said, by February, March, it's off peak. We are not doing anything. So now, and I looked at him, and was impressed, because that's somebody who knows their market. And that is it with so many other businesses, where they have their off-peak period and they have their normal period. If the investor now invests in the off-peak period and there is nothing to show for it, you
Mhm.
people will not come and collect your money. And that's where, like, you people should keep your money. Don't worry, we'll bootstrap. I hope you get what I mean. Because
I,
sometimes the
yes.
business is up and then the business is down. How then do we balance?
Yeah, so that's seasonality in the business model, right?
Okay.
Especially with B2C or some B2B business models. Now, this is why I need to now put on the other hat.
Okay. The other patient art.
Yes, which is a faith-driven investor.
Hmm.
Because we have to acknowledge certain things that are reality, that make up reality. What I kind of find discomforting with the business world is that we tend to ignore the wickedness in the society, the
Okay.
inequalities in the society,
Okay.
the inequities in the society. And we run on the assumption in most cases that everyone has equal access to opportunities,
Hmm.
that everyone has equal access to fairness, which
Hmm.
is not the case.
Hmm.
This is what financial models do not capture. We're very good at projecting, growth rate on a monthly basis, and the
Yeah.
CAGR and what have used, the IRLs and what have used,
Mm-hmm.
but we completely ignore the human elements, the fact that not everyone has the right or had the same opportunities to maybe to get the right education. We ignore the fact that we've got, unfairness in the business world, or even just in just basic reality on a day-to-day basis.
mm,
And then we also forget the fact that even human beings themselves have to work through issues. You could have an entrepreneur who has family problems, which could probably affect their psychological makeup, and that could affect business.
mm.
Now, if I'm only concerned about the numbers, I wouldn't care about that entrepreneur, about the founder. I'll be like, okay, fine. We've seen that your performance is quite poor. We're thinking about replacing you, or maybe you need to have like go on a
A break.
sabbatical,
Mm,
a break, and then we'll hire a CEO to step in and then run the business.
mm,
We've believed, quite sadly, that that is how life should be. That's not how life should be. No, because at the very end, business is for man. Man is not for business.
mm,
The value attached to a dollar sign, dollar symbol, or to a naira symbol is because people believe they can use that currency to buy and sell.
mm,
So the real value is in the humans using it, not the currency. That's what we have forgotten over the years, over the centuries. So my faith-driven heart, my faith, heart would acknowledge the wickedness, the unfairness in society, and then sit down with the entrepreneur and say, okay, I know that if I deploy X amounts of dollars into your business,
mm,
um, because of these challenges, because of these externalities, I cannot get a return within 5 years. But I have a different mindset. I'm not investing because I'm running, I'm powered by fear. Rather, I am powered by grace. I believe in abundance, not lack. And I believe that my major investor, because every investor that you see out there, they're basically fund managers. They don't really own the money.
mm,
So I believe that the one who provides me money, even though he might use people, is God. He's my source.
mm,
So my thinking is different. I will say that, okay, fine, maybe in 10 years, 20 years, I'll get a return. But that's okay because I'll be much more concerned with if I invest in your business, how will my capital and also my mentorship change your life? And how would that impact your families? And how will your business change the lives of people around you? Because that's a real return on investment. Of course, capital comes into play, but because I know who my source is, I
mm,
know that when he says in the Bible, give and it shall be given back unto you, pressed down, shaken together, and running over, he will provide more sources, other ways of returns. And I've seen that play out many times in my life. Now, that sounds too far right in the business world, but I believe that one can bring both hands together and find a balance. Some opportunities to be purely about the numbers, some would be a bit of numbers and grace, while some will be purely about grace. I believe that a portfolio can be evenly balanced and distributed across these three kinds of investments. That way, we can be graceful
taking people's
while
thoughts.
acknowledging, yeah, while acknowledging the reality that we dwell in at the moment at the same time.
Okay, then. It signals on 91.3. We're discussing building ventures that last with David Ogundeko, who's the founder of Funema. Well, in the short time we spoke on, is an empathic, let me use the word empathic venture capitalist. So that's what we're going to use. That's the term I'm going to use for you. Now, this is 2025. We're ending it any moment from now. What have you seen so far with the different business owners and founders and startups that you've come across? And what have you seen with the problems they've solved and they're solving and they are yet to solve? And in a summary, over 1 year, what have you seen so far?
I've seen a lot of fear,
Okay.
which is mostly driven by AI.
Okay.
I've seen it play out in both parts, not just in the founders who are creating businesses, but also in the investors who are deploying capital.
Hmm.
Because we've got these titans of industry, I wouldn't drop
Hello.
names,
Yeah.
that are raising all the billions and now they're worth trillions all within 1 year, and it's got everyone having this FOMO.
Fear of
that, oh
missing
my
out.
God, I missed out on that
Mm,
company. I need to find the next one similar to that company.
mm,
And it means that, and what it's creating is that you've got is that now you have this diversion of capital away from real economy
mm,
challenges,
mm,
going into more fabricated, opportunities.
mm.
It is a bubble. It's eventually bust in maybe the next 3 to 4 years. And then the founders, out of fear, are rebranding into AI businesses. Oh, yeah, we're an AI-powered
Finally, somebody had to
commodity.
say
Yeah, we're an AI-powered cow, cow rearing farm. So we have an AI that understands the cows that are on the, it knows when the cows will eat, and it can predict, how the cows will move and all. Yeah, so yeah, it's I'm sorry.
no, no,
Yeah,
no. But but
no,
but but here's the thing.
yeah,
It's really the fear of AI. I was telling a friend of
yes.
mine 2 nights ago, and it was in the midnight, and he had posted something, and I told him, "It's my dear friend." I said to him, "The old order still works. What you have still works. We can then now use the new language to talk about what we're selling and what we're doing. It's fun. Is a fantastic shoemaker, right?" And I said to him, leave the AI, leave every of these things. This thing still works. What we're creating and what for every business owner, what you're creating still works. We might now add little technology to it, but the fact that oh,
Hmm.
it's AI, is AI, is AI, it's that fear. I've seen it so far, and when I get into conversations, and I'm a bit stubborn anyway. When I get into conversations about business, I just know one thing that um, if this works, I have a niece of mine. She will look at me and tell me, if it's not broken, don't fix it. That's what she tells me. She's a 25-year-old young lady. She will tell me to my face, and she told me, if it's not broken, we're not fixing it. And I'm like, and she will say
Hmm.
that for years. And I'll look at her, and for some reason, it's stuck. That if the business is still working and meeting a need, well, why are we trying to choke what we have created because, oh, there is the buzzword in town is AI. AI is taking everything. And I'm wondering, okay. And I told my
Yeah.
friend, I said, see, the old order still works. How you then tweak it a little bit because people are going to look for experience. There's a new generation coming after us. Yes, they might have AI, but they might never have the experiences that we've put in so far. The mixture of
Hmm.
egg and flour is still the same. 20 years down the line is still the same, right? So how then would you say that you've been able to walk people through their fears? And I know you understand what I'm saying.
Yeah. So yeah, let's actually start with your friend, the shoemaker. Let's walk him through
Yes.
his fear, right? So like I did mention earlier, technology is really an amplifier. It's to improve, to bring about efficiency gains and scale at a fraction of the cost. For example, if he wants to sell his shoemaking services to 1,000 people,
Yes.
um, and all he has is just a little store somewhere in the market,
Yeah.
he has to work with the assumption that he would receive at least 100 people for 10 days, which
Mm,
is not possible.
mm, mm,
So now he needs e-commerce to
mm,
enable that. With e-commerce, because 100 people in 10 days, there's a conversion rate. It means that 100 people, maybe out of 500, came
mm,
to his store, and
yeah.
then one in every five decided to buy a shoe. And we know that's not actually possible
Mm-mm,
because it's kind of store even taking that kind of crowd. That's not possible. So
mm,
with technology, you can have an online store. We can create traffic or drive traffic to his online store, and he could likely hit about 10,000 people on a daily basis and then have at least 100, maybe a conversion of 10% or 1% buy a product 10 days throughout the month. Yes, hit his target sales of 1,000. Now, what AI now does is that it improves and completely transforms the experience. And you have to decide where you want to put AI in because AI can automate certain workflows in your business model. So
mm,
let's say, for example, he's got his online store now and he's receiving a lot of requests on a daily basis, maybe like 100 requests per day. And
mm,
he's just one man and he's not really making a lot of money to hire a team of 10 people.
yeah.
So how will he now address that? Now it's still just making shoes, by the way.
Yes.
And he's investing more. If he doesn't want to have like a plant that is automated in production, he
Yeah.
wants to focus on just train more apprentices to make more shoes. That's fine. If they can meet the demand, that's great. Now we can then use AI to automate the customer interaction
Hmm.
with potential buyers. He doesn't have to worry about that. He doesn't have to increase the workforce around sales. He can just focus on production.
Hmm. Hmm.
AI can also transform personalization. If just by with machine learning, based if you can triangulate data between people, what people are buying, what they prefer, and even what they would like to have as personalization, it can help customers, potential customers, refine, maybe have a little bit of a color tone change here and there before they buy. If that would improve or increase the sales performance
Hmm.
by 10, 20%, AI can enable that.
Hmm.
So it's not just chasing AI for the sake of AI. It's about, okay, this is a tool. How can it serve my business to ensure that my customers have fantastic experience and fantastic value creation from my business? That's how I would advise founders who are afraid of AI, afraid of being irrelevant, to look at AI. It's a tool, and they should master it, not run away from it, but to actually master it.
Okay. Signals on 91.3, signals on 91.3 Lagos stocks. My name is Adewunmi Oshodi, and we're discussing building ventures that last with David Ogundeko. If you have questions, comments, send us a WhatsApp message 0809-234-5913, or you can call us 0704 700 9913 0704 100 7913. I have a message and it says, how as an entrepreneur, how do I stand the test of time? Where that's one, and then the second one is and there's no name, so please send us your name, questions. At what point do I raise money in my business? Is it the beginning, middle, or the end?
Both questions actually work
Yeah.
together.
Okay.
Okay,
Okay.
so how do I stand the test of time?
Yes.
That already is a given if you're doing what you're meant to do. And how do you know that you're meant to do what you're doing? Is
Okay.
there's an obsession about the problem.
Hmm.
You can't do anything else. You can't think of anything else. You're just driven by that problem. You're always thinking about solutions, what to do, how to make the customers happy, how to improve on the product. Now, once you have that, that's the base, should I say, foundation,
Yeah.
or the crucial ingredient. But then, of course, you have to weather the storm. So by weathering the storm, you need to have certain tools in place, certain models in place, and certain mental models as well. You need to understand that a business is still it's very much organic, and because it's organic, it's not existing in a vacuum. It's
Mm,
existing in a real economy, and it will always be affected by market changes and conditions.
mm,
So as if you have to see yourself as a sailor, you need to know that when the storms come, you know what sailors do. They're like, all right, can you like pull that little, I'm not exactly a sailor, but they know how to like navigate the ship by
mm,
pulling the sails at certain degrees to catch the winds or to avoid certain violent winds.
mm,
So a founder must also be ready, not run with the false premise that it's business as usual. It's
mm,
not possible.
mm,
This is where I see founders kind of drop the ball and lose. And what I mean by dropping the ball, if the economy is really tough and requires a bit of a cash crunch, you have to reduce your expenditure. And you must be able to even see it happening at least a couple of months, maybe a quarter or two ahead of time. So you don't put yourself in a bubble or in a vacuum. Be aware of what's happening around you. And if you're a spiritual led founder, I always believe in you have to pray, let God even give you insights, let God give you wisdom a word of wisdom on what's coming, and then you can use that to guide your decision on a daily or monthly basis. That's how you stand the test of time. Now, the second question is also quite crucial to
mm,
standing the test of time because people keep asking, when is the best time to raise capital? I would say when you have something to scale.
mm.
Your number one investor is your customer.
Okay.
You have to run the business in a way that your very existence is defined by your customers. Venture capitalists or investors should bring in the capital required for you to scale, whereby now you can reach more customers. You need to have a critical mass that if I can reach 100 customers, it's just a random number, 100 customers on a monthly basis, and I can retain those customers, I can maintain I will call it a baseline performance where I can pay myself, I can pay a few people, right? And we can keep reinvesting, we can keep improving the product.
Mm.
Maybe you're making about 5 million naira or maybe $100,000 a month. Oh, okay, 5 million naira is like what, $1,000? I'm trying to figure out well, it all depends really.
Yeah.
But let target that baseline first of all. Now, once you've achieved that baseline, okay, great. I want to scale this because capital should not be seen as a source of sustenance. It has to scale what is existing. It is an investment, and you have to be faithful. If you look, if even in the Bible, when God gave out the talents that the servant who had 5 talents, when he came back, what did the master do? He said, "Oh, you multiply to 5. Great, you are faithful."
Mm.
But the servants who went to bury the talent, the servant who had just 1 talent and buried it and did not even grow it, it was called a wicked servant.
Mm.
So it's really about scaling. Capital is for you to scale. Now, that doesn't take away the fact that we have angel investors who
Mm.
then come and walk the journey with you. Now, that is not a venture capitalist. That is people who believe in your idea, who believe in the problem that you're trying to solve, who believe in the market because they have some sort of experience in the market. Now they can bring their capital and their mentorship. It has to be mentor-backed capital. If you have an angel investor who gives you money and doesn't bring in mentorship, run away. That's sharkish money.
Okay.
What's the point? Then just if you're taking money and then you're running a Ponzi scheme, that's just what it is. You have to, if they're going to give you cap, because they probably can give you a lot of money. So they have to bring in their network. Okay, I'm giving you like, I don't know, 1 millionaire. It's not a lot of money, but I would also open doors for you.
Mm.
I will send customers your way. The
Mm.
capital is meant to enable you to access the market and run efficiently. So I would say focus on generating revenue. Get angel investors that can bring capital plus mentorship and resources. Leverage that to achieve your baseline, be profitable to an extent, or at least have some level of, I would say, traction or product market fit. What that means is that if you keep, pushing the business, you're growing by X% on a monthly basis. There's just this acceleration happening. That's the best time to raise capital from VCs. Why? Because at that stage, the balance of power favors you.
Okay. The balance
Now
of
you can
power.
set the terms.
Mm.
Yes, the balance of power favors you.
Mm.
Now you can set the terms, and then money becomes your servant and not your master.
Okay.
Money must serve you, not control you. It's like fire.
Mm. Mm.
This probably will make me popular with the VCs, anyways.
Anyway, this is business owners, founders. At the end of the day, the problem we're solving, the value that we're trying to give is to the customers. So to many more customers this December, as we are going to dirty it and diligence it and dignify it. My time is up, right? My time for this conversation is up. But this is what I've picked so far. Money is a tool, AI is a tool. People who are bringing their funds must be patient enough because we are in the world of ups and downs, peak period and off peak period, so they can be very patient. And people should also, they're going to, yes, now, if people are going to also invest, they should also come with mentorship. And also, let's not also forget that for business owners, it's an exchange. But if even if you don't have spirituality, if you have your gut instinct, it never fails. If you have people who want to invest, because sometimes people are very careful about where they're raising their monies from, just so that they don't kick them out, right? And most business owners, at least 99% of business owners, are very are very, very attached to the businesses that they have, except that they want to sell. But if you ask a Nigerian business owner, do you want to sell or not? They first of all look at you like this. They have to ensure that this business, this child that we have labored for is willing to go to school, and some will not release. But however it is, what's the one thing with building Funema all through these years has taught you?
Wow. I should pick just one.
1, 2, 3, 4, 5. Give me 5. 5 things that Funema has taught you.
If you're building for impact, be ready to weather the storm. Because the odds are stacked against you.
Okay.
Already. So that's number one. And which then leads to number 2. Because the odds are stacked against you, now the question is, who's backing you?
Okay, all right.
So now you need a higher power to back you.
That's God.
Yeah, that is God. Right? So if God is backing you, you can actually weather the storm. Now, the third thing is be careful who you hire. It's very, very important to just hire because you need someone. Take your time. Hire people that you can mentor and coach. I've learned that the hard way. Fourth, be careful who your partners are.
Okay.
Don't just partner willy-nilly. Don't just get money from any kind of investor. It's not, no, please. Money is easy to spend. But when you finish spending that money and your eyes have cleared, le bâton.
Okay.
Yeah, le bâton. Then number 5 is this. Because entrepreneurs are agents of change. In fact, I would say that they are the original pastors, and I'm coming while I'm saying that. I'll tell you why. Because you're trying to create order out of chaos. There's a lot of chaos out there. And as a founder, as an entrepreneur, you are creating order. You are creating a system where people can buy a solution, it can solve their problem, make their lives better. And because their lives are better, they can pursue their own dreams. And once they become successful, they can become wealthy. Can you see the knock-on effects? Exactly. It's a systemic thing. Now, because it's a systemic thing, you need to have a system to guide you. Because with a system of frameworks, you can calibrate how you engage the chaos. You can measure your impact, measure your input, know what to tweak and optimize to improve the outcome. If you don't have a system, and you're trying to create a system, what are you doing? Please go and be an employee. There's a system there already. Just join the system and create them. So you need to have a system, and there are lots of systems out there. I know you already have time. Maybe we can have a part 2 of this.
Yeah, when you come to Nigeria,
we can talk about the systems. You guys want to drag me?
Yes.
When send me private jets.
I will
private jets. Presidential jets.
You're coming to Nigeria. Come home.
I want a red carpet welcome.
Everything you want to be sorted. Come home.
Everything.
Come and share your
brigade.
I will call the army band to come and welcome you.
Well, that's also nice.
It will be nice. Come home and come and teach everybody. Because I'm not joking. I'm not joking. Come and teach, come and lead, come and help people. Because we have, one of the things that beyond funds is also the right knowledge in ensuring that we have right skill set, right knowledge to push businesses forward. Every morning on Saturday, Signals Marketplace, my heart is full because I hear different business owners call, and it's one of the hardest part of my job, but I love it. I love it because I have to listen to different businesses call in, support one another to just ensure that we're all interconnected and people can also exchange value. So that knowledge that we would need for the business to move to the next level. When Biola was calling me, he was always calling about his wife, the cake business. And then next time he's calling me, he said, oh, she also has UI and UX. Again, that technology wahala because we're trying to get more markets. And we also need to know that the one you're doing, that little kuli, that little puff you're selling is good. More business. If I'm sure that by the time they have 150K, 100K, it will move their business forward. And guess what? They all want to make. We are entrepreneurs. Nigerians, whether we're employing or not, we're generally entrepreneurs, ensuring that there is an exchange of value. So where we then need to have what we then need to have is knowledge, more right knowledge for our businesses, because it's not a one size fits all. What will help my business will not help somebody else's business, right? But again, one thing that we all have unique is customers, money, tools. But please, come home. Thank you very much. Till we come your way again next week Saturday, like we always see on Signals. Dream again, create opportunities for people. And because people will be people, keep creating opportunities. Thank you very much, David Ogundeko from Funema. And Shola Oshanaiki for ensuring that this happened. If not, I would have been under and I'll go to the naughty corner. But thank you so much. Thank you so much for sharing your. Shola is coming for me. I know he's listening. I'm personally looking for his trouble. Well, thank you so much. Thank you so much. So everyone who's listening, then thank you for listening. As like always say, we will be together. I'm back. Don't worry, I'm back. So we come your way again next week Saturday. Have a wonderful week and God bless.